Hello friends, today I am going to discuss the concept, meaning and types of business finance. In the last session, I had covered the concept, meaning and types of finance. So today I will deal with the business finance. So let's begin with the introduction of business finance. The term business finance connotes finance of business activities, means all the activities with respect to business here taken into consideration, and it should be in terms of finance. It is composed of two words. So business finance includes two words. First is business and another one is finance. Thus, it is essential to understand the meaning of both the terms, business as well as finance, which is just the starting point to develop the whole concept and meaning of the term business finance. So it is essential to know the meaning of both the term. Firstly, I am going to explain the term business, then I will explain the term finance. Understand the concept of business. To know the concept of business, we must know the meaning of business. So the word business literally means a state of being busy. All creative human activities relating to the production and distribution of goods and services for satisfying human wants are known as business. So the term business itself state being busy, and all the human activities which are dealing with the production and distribution either of goods or services, and they are dealing just to satisfy the human wants, all this entire process can be termed as business. It also includes all those activities which indirectly help in production and exchange of goods. Means business not only involved in production, not only involved in distribution of goods and services, but if any activity which is helping in production or in exchange of goods and services, that too is a part of business, like transport, insurance, banking, and warehousing. All these are also a part of business, can be termed as business. So broadly speaking, the term business includes three things. First, industry, trade, and third, commerce. Now, after knowing the concept of business, we must know the concept of finance. So the term finance may be defined as the provision of money at the time when it is required. Finance refers to the management of flows of money through an organization. It concerns with the application of skills in manipulation, use, and control of money. Different authorities have interpreted the term finance differently. So, the basic concept of finance is just to make available the fund as and when required. It is related with the provision of money. Now, talking about the approaches to finance, there are three main approaches that are dealing with finance. First approach is related with the providing of funds needed by a business on most suitable terms. This approach confines finance to the raising of funds and to the study of financial institutions and instruments from where funds can be procured. So the first approach is related with raising of the fund and procurement of the fund with the help of certain financial institutions through various financial instruments and from number of sources through which the funds can be procured. The second approach related to the cash, and the third approach related to the raising of funds and their effective utilization. So third approach says that the funds cannot only be focused on the sources through which it can be generated, but also it is required to have a proper utilization of available financial resources so that it can be fruitfully utilized within an organization. So after knowing the concept of finance and the concept of business, we can know the meaning of business finance. So business finance can be can develop the meaning as an activity or the process which is concerned with acquisition of funds, use of funds, and distribution of profits by a business firm. Thus, business finance usually deals with four factors. First is financial planning, second one is acquisition of fund, third use of funds and allocation of fund, and last is financial control. So basically it involves three activities. First is related with acquisition of fund, second one is use of fund, and the third one is distribution of profits, which is related with financing decision, investment decision, as well as dividend decision. Now let's know the definition of business finance. First definition according to Wheeler is business finance is that business activity which concern with the acquisition and conservation of capital fund in meeting financial needs and overall objective of a business enterprise. Another definition is according to Gutman and Doggle, business finance can broadly be defined as the activity concerned with planning, raising, controlling, administering of the fund used in the business. And in the words of Parther and Wood, business finance deals primarily with raising, administering, and distributing funds by privately owned business units operating in non-financial fields of industry. So it can be inferred that business finance is mainly related with raising of fund and their effective utilization, as well as it includes three financing decision. First is investment decision, financing decision, and third one is dividend decision. Now let's have a look towards the categories of business finance. There are three main categories of business finance. First is sole proprietary finance, second partnership firm finance, and third is corporation or company finance. Now I am going to discuss all these three categories of business finance in detail. So in sole proprietary finance form of organization, a single individual promotes, finances, controls, and manages the business enterprise. He also bears the whole risk of business. So, in sole proprietary finance, we can say there is an individual who take the responsibility of promoting the finance, generating the fund, their financial control, as well as managing the entire enterprise, and also bears the whole risk of business. In terms of partnership firm finance, we can say it is an association of two or more persons to carry on as co-owner of a business. As you can see here, I had used the partnership firm, so it means it includes two or more persons and they share its profit and losses as per their profit and sharing ratio. So it may come into existence either as a result of expansion of sole trade business or by an agreement between two or more persons. So it is an extension of sole proprietary finance, we can say, or here it involves an agreement between two or more persons who are ready to do business. Now, the third type of business finance is corporation or company finance. So, corporation is a legal entity having limited liability, perpetual succession, and a common seal. So, a corporation is regarded as something different from its owner. It is different from partnership firm, and it is regarded as an assets of the corporation which are owned by it rather than its member, and a corporation's liabilities are the obligations of the corporation, not the owner or the members. Look towards the definition of corporation finance. According to Encyclopedia of Social Sciences, corporation finance deals with the problems of corporate enterprise, and these problems includes the financial aspect of the promotion of new enterprises and their administration during early development, the accounting problems connected with the distinction between capital and income, and the administrative questions created by growth and expansion, and finally, the financial adjustment required for the bolstering up and rehabilitation of a corporation which has come into financial difficulties. So it not only helped the organization to grow, but also it promoted a new enterprise by looking after its administration, and finally strengthening their financial position to survive in a market for a longer period of time after meeting its financial difficulties. So we can draw the meaning of corporate finance as it is concerned with budgeting, financial forecasting, cash management, credit administration, investment analysis, and fund procurement of the business concern. And this business concern needs to adopt modern technology and application suitable to the global environment. So, in conclusion, I can say that the scope of financial or the scope of corporation finance is so wide as it covers the financial activities of business enterprise right from the inception to its growth and expansion, and in some cases to its winding up also. And it basically deals with these 4 points. First is financial planning, second one is acquisition of fund, third is use and allocation of fund, and fourth is financial control. So any business firm used to manage finance with the help of these 4 processes. Thus, to sum up in simple words, we can say that financial management as practiced by corporate or business firms can be called corporation finance or business finance. Thank you.